Imagine there's two restaurants. They serve very similar types of food, very similar ambiance, very similar menus. One used to be super crowded, super popular, but now it has, far less tables being occupied. And the other restaurant that's just down the street, right across the street actually, it is packed, line around the block. Now, they serve very similar styles of food, the ambiance very similar, they have very similar menus. One just has the hype behind it. This is kind of what's going on in passive ETF investing, index investing world right now. What we're gonna do in this video is we're gonna compare VTI and VOO, but we're also gonna compare them to SCHX and IVV. I'm gonna show you my ranking process that I go through, that I developed, that took me a long time to figure out, that's going to actually give us a winner between these different ETFs. Now then I'm going to show you my free web app that I created that takes this ranking system and allows you to just run it with like 2 buttons. I'm just gonna show you how that works so you can see and give you access to it if you wanna try it out. And by the end of this, we're gonna see what's happening between VTI and VOO. And we're gonna answer the question, does nobody care about VTI anymore? Now, let's start with directly seeing what's going on between these two by looking at fund flows. So what we're gonna do here is we're gonna take a look at 2 different time periods. So the past 5 years, so that's on the right side, September 20th to September of 2025. And then we're gonna compare the flows of the funds going into these 2 ETFs. So how much money was basically put into these ETFs. We're gonna compare that to how much money was added to these ETFs the previous 5 years. So we're gonna look at September 2015 to 2020. And this is gonna show us a clear example of what's going on. So for the 5 years from 2015 to 2020, $59 billion was added into VTI, the Vanguard Total Stock Market Index. And over that same 5-year period, VOO had $79 billion added into the ETF. VOO being the S&P 500 tracking ETF, not the broad market ETF like VTI. Already kind of interesting, I actually thought VTI would have had more money being put into it over that time period, but that's not true. But here's where things get really crazy. So the 5 years after that, how much money was added to the two? So we have $164 billion going into VTI. So a lot more money went into VTI the 5 years following. Like a lot of money more, right? So you'd think, wow, VTI is doing much better. So of course, this is looking great for VTI. When we take a look at how much it went up, it was 2.8x. Again, that sounds like a lot, right? 2.8x. But look at VOO. $360 billion going into VOO, which is a 4.6x over that time period. So what happened? VOO just kicked VTI's ass, basically. Now I know I was a little harsh in the start. It's not like VTI does have an empty restaurant with just a few tables. Still lots of people are putting money into this thing. But VOO has had a lot more money being added into the ETF. So what is going on here? Let's go through my ranking system and see if that helps us figure out what may be going on between these different funds. And we're gonna add in some other funds as well. So first off, I'm gonna take a look at the expense ratio. And what I do is like a decathlon, where you take a bunch of different sports and you add up all the raw scores of those things, like for example, like shot put, and maybe long jump and high jump, and you take all these scores and you add them up. That's kind of what I'm doing here with this process. I'm gonna take a few different things, expense ratio, performance, the stability of the dividend, depending on what type of score we're going for. And we're going to add these all up, and we're gonna come up with a general score. But also like a decathlon, some things matter more than others. For example, if high jump was more important than the long jump, they would be weighted differently. And so what we have is the income decathlon, a growth decathlon, and in today's instance, the passive investing decathlon. So this is the kind of methodology we're using today is for a passive investing decathlon. So for expense ratio, when we start going through this, we have 0.03% for VOO, for IVV, for SCHX, for VTI. So they all have the same expense ratio. These are passive investing type of index tracking ETFs, pretty broad market ETFs. And so that's what you want when you have some type of broad market passive investing strategy. Just a low fee, fund. But then we'll take a look at yield at 1.5% IVV, 1.13% VOO, 1.13% VTI, and 1.09% SCHX. Taking a look at the max drawdown, going back to September 9th of 2010, max drawdown being, if you take a look at this chart here, see that top little area that's circled to the bottom part. So from when it hits a peak to when it hits that trough, what's the drawdown? Could be over any time period, it could be over a year, it could be over a month. It's just from the peak to the trough, how much did it fall? And so what we do is we want to see if one of these ETFs is maybe more risky in terms of how much the max drawdown was in the past. Negative 33.9% IVV, negative 33.99% VOO, negative 34.35% SCHX, negative 35% for VTI. Honestly, they're super close. Basically just 1% distinguishing these different ETFs, so we're gonna call this a wash. They had basically the same max drawdown. Let's take a look at volatility. 16.22% for VOO. Higher volatility means it's more volatile, a higher number here. 16.3% for IVV, 16.51% for SCHX, 16.79% for VTI. VTI being the more volatile ETF here, but again, look how close these are. They're basically also a wash. But now if we take a look at dividend stability, 77.5 for VOO, 76.9 SCHX, 75.8 for VTI, 61 for IVV. The stability score is something I created, so just looking at how stable the dividends are, actually not very important for a passive investing strategy, but we're going through the whole thing here when I go through my process of how to rank an ETF. We have the diversification, or how many holdings there are in the fund, 505 for VOO, 508 for IVV, 755 for SCHX, 3,494 for VTI. So much more stocks when we're talking about VTI. SCHX does have a bit more, like 250 more stocks than VOO does. So interestingly, if you're not sure, if FCHX hasn't been on your radar, interesting one to maybe check out here. Size, or the assets under management, 60.9 billion for SCHX. So this is actually the smaller of these ETFs. 659 billion for IVV, 1.4 trillion for VOO, and for VTI we have 2 trillion. So interesting. VTI, even though it had less money going into the fund recently, it's actually got still quite a bit more money than VOO does. Let's talk returns. We're gonna look at the 3-year return first. So VTI's 3-year return is 23.37%, VOO's 23.95%, IVV's 23.96%, 24.10 for SCHX. Super close returns, of course. These are very similar ETFs. 3-year returns, you can see how similar they are. 5-year returns, I'm just gonna go through this fast so we can get to the end, and we have VOO with the highest return at 17.22%, tied with IVV, of course, because they are basically tracking the same stocks. VTI having the lower of these, 16.48%. And then the 10-year annual rate of return, we have VTI with the lower return again, 14.51% versus 15.51% for VOO, and essentially for IVV as well. Then you got SCHX in there with a 14.99%. Now, what does this turn into when we're talking about actual like hard money? Because when we look at the percentages, it's like, okay, maybe it made 0.5% more over 10 years, but what does that actually even grow to is the question. So let's take a look at the 10-year growth of $10,000. So if you added $10,000 to any of these ETFs, how much would it grow to? VTI is $38,761, SCHX $40,422, IVV $40,948, and then VOO $40,979. And so you have a little bit more than $2,000 if you invested in VOO instead of VTI over the past 10 years, and you put $10,000 in at the start. This whole thing adds up into these scores. We're not going to go through all of these scores, but I will tell you, take a look at this red part here. And if you remember how I talked about the passive investing decathlon type thing, well, this is what I was talking about. Because we're gonna weight this based on passive investors, we're gonna give 25% of the score to the expense ratio. So the highest weight of my score is going to expense ratio. And this is gonna help cheaper funds do better. And all the other ones are kind of just like, you need to just tick these boxes to get past the kind of gates I have. Now you're gonna see there's a tie between two ETFs here. IVV, VOO. So in terms of which of these ETFs ranks the best, you're gonna see it in the app in a second, but you can see the results here. And before I do show you the app, I do wanna show you the sectors and just how close these actually are. So for example, VOO, higher sector is gonna be white. So if you look at VOO, 9.9% communication services, it's got a little bit more in consumer staples, it's got a little bit more in information technology, and then utilities. And when I say a little bit more, the biggest difference here is actually in the information technology with 34.1% versus 31.9% for VTI. And what you're gonna see is VTI having a bit more towards industrials. That's what stands out to me. All in all, these look so similar. The returns are very similar. The expense ratios are the same. The max drawdowns are very similar. The volatility is very similar. These are very similar funds. Why is VTI not doing as well in terms of money flowing in as VOO? Let me show you the web app first, and we're gonna figure that out. So here's my web app, and I'm gonna show you how this works. By the way, this is a beta version, just so you know. Still adding a bunch of different features to this and making it even better. So over the next month, 2 months, I think this is gonna get even better than it is right now. But what we do is we say, okay, we're gonna go with the passive decathlon that we were talking about. We're gonna add in our different ETFs, VOO, VTI, SCHX, IVV. You gotta hit enter here, and then after you hit enter, you hit compare. Basically did all the work I just showed you, which took me a while to go through and find all the numbers, right? Well, here, it's all done for you. And so here we have VOO as number 1, IVV is number 2. The reason that VOO is showing number 1 is just because what I did was I said, make the larger ETF number 1 if there's a tie. So it just shows VOO is number 1, we got SCHX number 3, and VTI is number 4. Now, the reason that I think people are running towards VOO over VTI is because of basically how I had to set this ETF compare up. When comparing two ETFs, of course, you can combine ETFs and make a nice portfolio of different ETFs, but if you're saying, which one of these just on its own looks better, I'm a passive investor, I just want to own one of these. Well, once you get through all of the other very similar things like expense ratio and drawdown and volatility and all those things, there's only one thing left. There's only one thing left to compare, and it's the past returns. At least when you're creating something like this. I am working on some things to help distinguish what might be better based on how you feel about the current state of the market. And that's more on which styles do you think are gonna outperform, which sectors you think might outperform, whether or not you think some are maybe overvalued or undervalued or whatever it is. I'm still working on that, and that's not gonna be out for a bit. So for now, this is how you do figure out and rank with a system without putting any bias into it. This is how you do it. And it's all based on that performance. That's the only kind of distinguishing factor that we can choose here because they're all so similar. So why are people putting more money into VOO versus VTI? It's just because VOO has done a bit better, and partly because, as we can see here, information technology weighted higher in VOO, which has helped lead to some outperformance by VOO compared to VTI. Check out ETF Compare for free. Link in the description below. Have fun with it. Let me know what you think. I'd love your feedback. And I'll see you in the next one.